We are social beings. That's what we are. I started becoming a storyteller, and I would go to these experts because I had the audience.
I started looking at people that I know who are successful. That is the key skill set that all of those people have.
If I'm in Toronto, I want to go to Los Angeles, and I don't really know where I'm going, and I just look at where I am, I might get stuck in Buffalo.
If you could go back and give your younger self financial advice, what would it be? Hi, everyone. Welcome to PlanAssist podcast, a new podcast for this week. And I can't tell you how excited I am to welcome our guest today because he really has helped people maintain their wealth. It's about preservation and then distributing that wealth that many of you have heard me talk about a lot. So sometimes I'm helping people grow their wealth if they're early in their careers. Other times it's really helping them maintain and preserve that wealth. In today's conversation, though, he'll give us some ideas on how to grow our wealth. He's spent 30 years actually helping wealthy people maintain and preserve that wealth. He's got an enormous amount of knowledge. He's written multiple books. He's actually Canadian, but lives in the U.S. and a specialist in helping people move assets across international borders and wealth and a whole host of things. So I think when we get into this conversation, you're going to really enjoy getting some of the information that he's going to share with us. Today's guest is Peter Merrick, and again, he's a bestseller. He's writing a book right now that's called Starts with Gold, and you can actually, the QR code's behind him there in that video. But he's also written a dozen other books, some just for financial advisors. And I want to just spend a minute. One of it is a 1,300-page book that he wrote that's for people like me to help you as a client, where we need really detailed information. And he's the guy we go to get some of that information to help us really give you advice. So as you know, PlanAssist is built around three core principles. People who are successful, whether they call them this or don't call them this, they almost all follow, have a plan, be diversified, and seek counsel. So they're almost all, it may not be that 45-page doc that gives them, that you kind of see printed out and don't do anything with, but they all kind of are clear on here's where I am and here's where I want to go. Diversification is a nuance. Sometimes you'll be concentrated in your investment career. Other times you'll actually be diversified as you get older and older, but that's a key. And then today's conversation is going to be the seek counsel is the third of the three things we talk about. And I think you're going to get a lot out of it. So with that, Peter, did I miss anything or did you want to add anything?
Well, it's always a pleasure. The number one thing that I always find, you mentioned my books, and I put together a number of textbooks, but what really was the value is I didn't write them by myself. I seek advice similar to yourself, Tim, from people who were experts, and I would learn. And that was such a great venue. And I had, at one point, I shared with you, at 11 columns, and I know that sounds like a lot, but when you break it down, if I was writing for doctors, I switched out to being a doctor. If I was writing to accountants, I'd be you and your clients. So it was really the same stuff, just personalized. And at one point, I had too many things I had to do. So I started becoming a storyteller, and I would go to these experts because I had the audience before, people had podcasts, people read papers or trade papers, and they would share with me 30 years of experience. And I woke up one day, probably in 2005, with my first book. I'd been writing for a number of years, and I wrote something on pension plans. And while I was putting it together, I went to the top people in the industry, and they weren't my competitors because no one knew about these plans that you shared. I'm from Canada. They were in the equivalent to the IRS tax codes, the Canadian equivalents. And there were certain people looking at it, and we were in competition because who likes you might not like me. And most importantly, we're going through such a transition in our civilization. I'm not just going to say society. There's not enough of us.
Right.
And those are people who are trained to work with people. Because can I share with you a stat? A woman I worked with who she was a financial psychologist. She had a PhD, and she discovered something about why people seek out financial planners, why people seek out advisors. Can I share that with you?
Oh, yeah, I'd love to hear it.
We are social beings. That's what we are. And people seek out advisors. She found out the core reason was they want to share the risk. They want to be able to talk to someone. They want to be able to rationalize why they're doing what they're doing. And sometimes you need to go to someone who's not invested because you're clearer. And she found out that that was the core reason. It wasn't so much that they wanted, you know, advice wasn't very important and everything like that, because people were looking for three things. They were looking, can I trust this person? That means the person's doing the best for themselves and for you, because it's not beneficial if you're the only one taking it. That's the advisor. Number two, are they committed to excellence, which you're proving by talking to different expertise, like you understand where you are and you're constantly learning. And most importantly, does the person care about you? Because I don't really care whether the person, does good things and they're committed to excellence. If they don't care about me, I really don't care to know what they have to offer,
Yeah,
because we're
exactly.
humans.
That's fantastic. So, and I'm going to actually get to the question, but I want to finish this kind of introduction on one point. One of the things that Peter touched on is him building that, writing those books, those columns. He reached out and got input. I can tell you, when I put together those three principles and got to the seeking counsel, I started looking at people that I know who are successful. That is the key skill set that all of those people have. And they almost come at it more like curiosity. They're not looking to sit down and be sold something. They'll call someone up and say, "Hey, Peter, what do you think about this?" or "What about that?" And they're really trying to get to best case, worst case scenario. That's really what they're trying to do. And they may talk to 10 people and get that feedback. So, anyways, with that, today, what I want to do, let's start this off with that one key question that I always start these podcasts off with, Peter. So, if you could go back and give your younger self financial advice, what would it be?
Don't be so hard on yourself.
That's good.
I started out and I felt like I was a jet engine and I wasn't moving anywhere. So start simple, but have a plan. Know where you're heading. The analogy that I keep on that comes into mind is, if you're flying to Los Angeles, and you have to determine where you're going. Now, most of the time, you're going to be off the flight path, like you've got wind, turbulence, and everything, but you're able to make that check and ask one significant question. Does what I do move me closer? And if it does, invite it in your life. But if you don't know what closer is, you're screwed.
Yeah, that's right.
Because if I'm in Toronto and want to go to Los Angeles and I don't really know where I'm going, and I just look at where I am, I might get stuck in Buffalo. Have you been to Buffalo, Tim?
Yes, I have.
Yeah, I don't want to be in Buffalo. I want to be in San
LA.
Diego. And
Yeah.
I got to go and look at where I want to go. And then I have to look what I have. And then I have to look at what the difference is, and I have to work backwards to say, what do I need to do? Like, I might be in a really bad place, because I truly believe, and you brought this up, I'm like a Sherpa. I'm like the relief pitcher. I don't make people money. Actually, don't take my advice how to make money. My clients know how to make money. I'm the one who you call in at the end of the game. They got points up on the board, and I'm the one who's there working to make sure whatever the other team does, whether it's the IRS, whether it's inflation, whatever it's going to be, that the other side's score stays as low as possible. But I'm not the person who actually goes. I'm like the National League, right? I'm a pitcher at the at the wrong one. I'm at the American League, where the pitchers don't bat, they just pitch.
Yeah, that's awesome.
And so one of the things to answer, which I think is so important, and it came well before our profession, Tim, and that was Socrates. And Socrates has a saying. Well, we don't know if he actually lived or not. Plato writes about him, but he said, "Know thyself." So if you mentioned people that come to you and seek your counsel. And these people have to know themselves. And entrepreneurs, to me, have in our society have the greatest potential for self-actualization. And the reason is they're rubbing up against the environment. No one has to pay them. They have huge risk. And they give themselves the opportunity to self-actualize, not so much self-actualize. They have to make the choices. However, these people know that they're not abdicating what they want. They know what they want, and they're able to seek out people to delegate. And you talked about seeking advice. And a mature individual knows what they want. They have a level of skills, and those people who are really skilled, they find people to delegate. They don't advocate, hoping that someone else is going to give them the life that they're not prepared to give themselves. And a lot of people who invest and go to a financial advisor, especially in the early years, they're hoping that this person's going to find the next Bitcoin and they can quit their job and live the life that they're not willing to take the first step to do it. So why should someone else help them if they're not willing to do it? That's the reason I deal with people at the end. And hopefully I live that life to some degree myself.
That's awesome. So that just kind of reiterates Charlie Munger was doing a Berkshire Hathaway Q&A, and someone asked him what is the best way to give advice or help people when it comes to financial advice in variation. I'm paraphrasing to some degree, but basically he said I can only really help people who are almost there, meaning they almost need to be there, right? You can't help people. I mean, to your point, this isn't like taking someone from 0 to 10. What you and I can do is help people that are at 7 or 8 and take them to 10, right? But we can't go from 0 to 7 or 8 without them doing some work, which kind of goes into their court. And they need to take some responsibility and kind of getting close. And then people like us using advice, different counsel from different people can help them kind of go across the finish line. And I find that to be really accurate when all the people that I work with that are really successful, I don't even think they realize how much they do what I just said. You know what I mean? Because if you talk to them, they don't really verbalize it, but they just do it over and over and over again.
I fully agree with you. I think that the outside world reflects your internal world,
Yeah.
and one of the things that I found about, like, I've worked with several billionaires and I've been fortunate. I don't have their money. They just, they pay me for whatever they perceive that I can
Counsel,
offer.
advice. Yeah.
However, one thing that I realized, and I don't work with PhDs. Now, let me tell your audience, it's not a doctoral student, a PhD. It is a Papa Hat Doe, someone who, is rich because someone else worked for it. So I work with street fighters. And let me share with you what I've learned by them. First of all, they don't look at your golf game or my golf game because mine's non-existent. They are able to look at people and they're able to judge them. Why? Can I say this? They're successful, but they did it themselves. So their assholes are like so big. They actually can, because they've been there. They have
Yeah.
experience and
No.
they're still getting up. They still get up. They don't get down. They continue to go because, let's face it, the more successful you are means the more trials you had. That's just a fact. And it's the person who shoots the gun more often, who through calibration, ballistics, they're going to more often hit the target. Now, one of the things that I discovered is it's not the external. In physics, they say the material world is 3%, and dark matter, dark energy is 97%. You can't see it. It's the same thing with an individual. And the people who are really successful, who did it from nothing and built it, they are able to deal with two things: higher levels of complexity. They're able to go and see moving parts and they're able to do it. And they have certain metaphors and understanding. And know thyself. They have gotten a level of control of their emotions and being able to apply that to delayed gratification. And that is one thing which is really powerful. And you mentioned it. When we talk to those clients, you shared with me the diversification that you have in your clients. And they understand when the market goes up and down, well, their whole lives was delayed gratifications. But if someone is like, they go into a 7-Eleven and they buy all the chocolate bars and all the chips and they just eat it, that person, it's gonna ripple out through their entire lives. They're also gonna buy something, it's gonna have a little dip, they're gonna
Yep.
sell it, and they're never gonna be anywhere. So this is the characteristics that I like, and I like that. Unfortunately, I've blown up several times in my life, and I have a really great resume if you look at it, only because I was too stupid to quit. So much of what I ended up doing is because I kept on going and I was open. So to go back to your question about what would I tell the younger me, what would I tell your audience? I wrote a book where I read over 250 books and academic papers on human aging, specifically male aging, because that was me. And I would actually say, go out there. Just go out there. Do not quit. The fear of something is always worse than the reality. And I could tell you because I've almost been in bankruptcy. Like back in 2003, I tried to take over an industry in Canada and I had big eyes and I wasn't on the leading edge. No one told me about the bleeding edge. And when they talk about when things happen, there's always another door that opens that's
Uh-huh.
available. They don't tell you about the bleeding edge. That's right, the bloody hallway. in between those next doors. However, you, through your experiences, this is to the young people listening, you develop discernment. You understand why you have ASAP and the tortoise and the hare about the tortoise wins the race, because that's the way it happens for the majority of people. And I will share something else with you. The reason I don't do it PhDs, Pop had go, and I used to work with the Lottery Corporation in Canada, and I worked with a number of lottery winners. Remember, I shared that the levels of complexity, these people here are being taken, let's say, from ground level, and if they won, the people who won the $2 billion are splitting it, right? In last week's lottery, if they don't have a level of maturity, a level of discernment, if they don't have the ability for deferred, gratification and the understanding that they need people, and they don't have the discernment to choose those people, it's going to be the equivalent of them going from sea level without any protection, going 40,000 feet. What's going to happen is they're going to blow because they don't know how to deal with that. So when I deal with the clients that I find, they've had difficulty. They don't buy in to their egos because ego kills. I've had some spectacular blow-ups in my life, things that I thought were going to happen and didn't. And I have to share with you that I'm still here. And I'm a much more human person. Like, one of the reasons I deal with a lot of philanthropy, and the reason why we should all give to things that are important, is because life is a wheel. And unfortunately, I've learned this too, that sometimes you're at the top of the wheel, but sometimes you're at the bottom. So I'm always nice to people because I know in my life, when I'm here, I know I'm going to be there. And
Exactly.
really, the real wealth that I'm going to share with your audience is people. That is the key. People forget that they're investing in companies, they're investing, in you, they're investing in relationships. That's all that really matters, is who are the people they're surrounded by. So be selective.
That is awesome. That's great advice. And it fits right into my whole Seek Counsel. Get a team of people around you that do all sorts of things, including finances, but it also includes health. It includes spiritual. It includes everything. Make sure that you're talking to people and not getting in a bubble and thinking that you have all the answers. So that's awesome. So let's talk a little bit about your book. It starts with gold.
Oh,
Yep.
wait a second.
Both.
It's
Yeah.
inverted.
Yeah.
Yeah, I just want to share to your audience that we made it fair use because we believe the information was important. And just before we talk about It Starts with Gold, I want to share that there's another book I wrote, which is called The King of Main Street. And I shared with you that I had read over 250 academic papers and every book on aging I could find, because at different stages of life, we do different things. At the early part of life, when we get out of school or, leave high school, university, our focus is on ego accumulation, the outside world. And you can continue doing that for the rest of your life, but life is really two races. And whatever happens, let's say around midpoint, you have to stop and forget, be mindful, but forget about the first race and what motivated you. And the second half is about distribution and giving it away, because I don't know anybody who's ever, take
Take
it
it.
with them,
Yeah,
right?
exactly.
Like they haven't taken it, and they can give it to people when they're dead, but they have no enjoyment from that. And if people give lots of money away when they're dead, they would have taken it with them if they could have.
Especially if they see what they did with it.
Right. But they would have, yeah, well, for sure. So that book was called The King of Main Street because what happened was I sat down, I put together a book, and I showed it to you. It was a little scary, right? This is one of my textbooks.
It's
It was like
amazing.
1,300
Yeah.
pages. I know it's pretty intimidating, but I didn't write it by myself. I brought in other experts similar to what you're doing. And what I realized is that book that I just showed you and the other textbooks, the only people reading them were people like you. And I wasn't able to communicate. And I realized something, that humans are storytellers, and it changed my entire writing. I started telling stories, but I put the facts in it. And I felt it was really important to have a story to bring everything that I had learned. And I spent, honestly, in that book, I spent like 30 years accumulating stuff. Something happens to you, you scratch your head, and it's actually imprinted in your muscles, and you like, I'm not going that door, or I should look for that door. We all go through because we're all
Yeah, no,
human.
that's right. Exactly.
And that's what people look for. They look for a relationship. And that book I thought was going to be my opus, and it almost was. And then something happened. It's called COVID lockdowns, and a lot of things that weren't prepared for occurred in my life. I woke up the next day, and that's the greatest thing. You wake up, there's an opportunity.
Yeah.
The only time you don't have an opportunity is when you don't wake up. So you have a purpose, right? Or it's your place to find it. Sorry, I'm going. The book, It Starts with Gold, was one of those things. The world had completely changed. And as you mentioned, my business is risk mitigation, wealth distribution. And the reason why it's different than someone who's growing wealth, because when you know what you're good at, like I'm not going to run a company with 2,000 people. It's just not in me. And I realize this is what I'm good at. And
Know
free,
thyself, like you talked
yeah,
about.
free will is really this. You have something that's unique about you, Tim. And your free will is to deny it and do something else or to accept it. Now, if you actually fight against it, let's say you decide you wanted to become a dentist because your parents wanted you, but you were an artist, you're going to not have a good life. And I truly believe that that's where our free will is. We can accept what we're good at or we could fight it. So I realized that I grew up with a tax accountant in my family. That's my father. And I wasn't trained to make money. My father, his entire existence was people who made money, and they would say, Marvin, how do we keep it? That's literally what it was. And he was an expert in the tax codes, and he would put things together. And God help us when he found that spreadsheet back in the early 1980s, he was able to do like stuff that he could never do with a calculator, right? It was
Yeah.
just he's in found Nevada. Well, this book here, it starts with gold. It came out of risk mitigation because the
Okay.
more you focus on something, the more it expands. It's just the way life is. You notice things. I'll give you an example for your audience. Like you're living in Florida, right?
Yep. Orlando,
Okay,
Florida.
so Orlando, love Orlando, Florida. I'm like, it's wonderful. Well, I don't know if this is true, but it's what we're told. The Inuit, the Eskimos, describe snow in 50 words. Like there's 50 different words because it is important to them. And they're able to see the little differences, like this type of weather is happening, this, they're able to notice it. And that's what happened. What the mind dwells upon, the mind can expand upon. And so just to put it into perspective, I'm risk mitigation and distribution. And I started asking a number of questions. I used to do a radio program out of England where I didn't talk about investing in stocks. That wasn't my role. I started looking at demographics. And because I was looking at long-term trends, because I can't tell you what the next breakthrough technology is, but I can tell you at your age what you are going to experience because we all have the same human experiences. We're born, we live, you choose how to, when you go to a graveyard, you see the headstones and you see the dash.
Yeah.
We got the dash. Some people have good things in between the dash, and other people don't have good things. And what came out of it is I was looking at, UN documents. I was looking at the Bank of International Settlement documents. I was reading about the Depository Trust Corporation, all these documents. And so this is not conspiracy because I go to first sources. I'm not reading about someone else. And I was horrified. I was horrified by that the people who are running us, I don't know if they're psychopaths. However, they don't like most of humanity. They look at us as being cattle. And just to put it in perspective, because I'm guilty too, I like meat. I do not think about I did whatever I needed to do in my mind to not think about maybe chickens feel pain and beef, like, cows and steers feel pain for the meat to eat. And that they're so removed, and these papers are so frightening. I felt that it was important to look at putting together a book that would tell how did we get here, going and talking about these papers, talking about the founding of the private Federal Reserve, and all the central banks in the world are private. And there's no reason for them to be private because in the United States, the Treasury has the right to produce currency. And that currency doesn't need interest. But they gave it to a private entity that charges interest. And the way the money is created, and this is something we dig into the book, is when the United States, let's use an example. like let's say there's some crisis or something like that. So Congress says we're going to borrow $1 trillion. So what they do is they go to the Federal Reserve, and the Federal Reserve creates paper. It didn't exist. It's not real. Most people think that like money is real. This is created out of nowhere. And there's something called fractional banking. That $1 trillion now has to be deposited into approved institution. And it goes there, and that approved institution, let's imagine it's allowed to lend out 900, sorry, $1 billion. It only has to keep 10%, and it keeps on happening. So that $1 trillion ends up becoming a quadrillion dollars.
Yeah, exactly. Just
Yeah,
over and
it
over.
becomes huge. Now, let me share with you how frightening it is. As of March 26, 2020, they used to require that banks would keep reserves. And they took that away. That means they can produce as much money as possible. It's like they're just writing pieces of paper. Now it's a belief system because it's credit. Now, let me share with you what the problem is when they create this money. They do not create the interest that has to be paid. So they have to keep on creating debt. They have to keep on finding people to borrow. It's a Ponzi scheme. And in the book, we show how it works. Not only do we show how it works, we show societies that did this and what the end result was. I'll give you an example. The first society that we know of was the Yuan dynasty. It was the largest empire in the world in the 12th to 13th century. And it went into parts of Russia and everything was huge. And they went completely paper based. Well, then it collapsed because eventually people the king, the emperor has no clothes, and it collapsed. And we're told in history that there were warlords and how their society had fallen apart. Well, that happened because of that. And what occurred was the Ming Dynasty came up about 30 years later, and they used real things to back their currency, silver, and other societies use gold. Now, since 1971, the US got off the gold standard. So all it is a Ponzi scheme that you have to find more and more people. And right now, all the central banks are buying gold and silver. But you want to know where the big ruse is? The big ruse is nothing is allowed to if you're a mobster, right? Because these are private central banks. You're not going to let these cryptos be there unless there's a reason for it. So they're allowing people to buy crypto. And the next book I'm writing is called Killing Crypto. They're allowing it to occur for a reason because they have no competition with gold and silver. Now, I want to share with you, we looked at society, we give all the information in this book. It starts with gold because we need you. And
How
that's
long
what
is how long how
it's
long is it?
580 pages.
Holy Moses, it's a
Yeah, it's
long
still
book.
smaller,
Yeah,
smaller.
exactly. But it still gives you a sense of kind of how much
Well,
detail you went into. That's why I asked the
it's
question.
written in a conversational way where my writing partner and we hope that you would want to come and have drinks with us. Like
Right.
literally, we were having like Tuesdays with Maury talking because, we're drinking because the information is so horrific. And again, I want to impress on your audience that we weren't some conspiracy theorists that were saying like UFOs and whatever. These are real organizations who have significant influence or power over our lives that were issuing papers. I'll give you an example. Gold right now is trading about like over $3,000. Now, the central banks since 2008 have been buying anywhere from 1,000 tons to we don't know how much because, like, no one goes and audits their books. Now, people who usually buy gold and silver, they go to their broker and they go and they get an IU slip saying they have rights to gold and silver. There's a problem with that because if the market crashes, it crashes and people want their gold, they're going to be in line and there's no gold. And this is very frightening. Also, in the book, we talk about how when we were all sleeping, laws had been passed throughout the United States and then through the world that you don't even own what you think you own. You are a beneficial owner. What that means is you can sell it and get paid. You can get dividends on a stock, but you don't own it. So if things go bad, you lose everything. And this to me, I've been in the industry 34 years. I didn't know this. I didn't know this. Why? Because I was too busy with my life. And I was too busy selling narratives that I never stopped and thought. So what this book does with, we need you and I mean everybody, to, become educated. And that's the reason we made it fair use. Like we've had over 80,000 downloads on this book. And you can buy the hardcover on Amazon, or you can get the audio on Amazon. But it's important because your kids and my kids, if they're going to have a future, your kids have to be healthy too. Who are my kids going to marry? Like, who are my kids going to live with? Who? It's important because we are at the end of the system. We also tie a lot of what happened during COVID to finance because the system was about to crash. Back in 2019, for your viewers who do not know this, there's something called the overnight markets, the repo markets. This is when banks lend to each other. They didn't trust each other. They are scrambling to go and pay people off. And the next book that we're writing is called Killing Crypto because nothing is allowed in our society that doesn't serve a purpose. I know we like to think we have agency, but on the big macro things, it's planned out. And they are talking about there's 167 nations doing trials for central bank digital currency. And it's not like normal currency. They will be able to control you. And you mentioned that I'm Canadian. And they did something really interesting in Canada that hadn't happened in like a democracy. They froze people's bank accounts because they had donated money to peaceful truckers.
Yeah, I remember that.
And as soon as we get onto digital, then they're able to control us. So what we talk about in It Starts with Gold, and we further go deeper in Killing Crypto, is you have to own assets in order of asset security. And what that means is if the shit hits the fan and a tsunami is coming in, if it happens to be 5,000 feet higher, let's say, we're all dead, right? But let's say it's not. You want to get as high up as you possibly can so you will survive. And that goes hand in hand with what I've spent the last 34 years being attracted to in our business is risk mitigation. So the people who come to me are looking to de-risk their wealth. And more importantly, what we're doing right now, Tim, which I appreciate more than any client, any money, is to rematerialize your life. Have community, have conversations, take a walk, like get seeds, bullets, land, whatever you need, because, you can't eat gold or silver. However, history has shown us over the last 5,000 years of recorded history that societies always go back to those two metals.
So help me understand or explain, or what's your opinion is probably a better way to word this, is what percent of someone's assets, you're working with someone that has $1 million, $2 million, what percent do you think they should go and get actual physical gold? Now, because this does come up with periodically. Now, here's the risk. Okay, so you and I have a similar track record in the financial
Yeah.
services business. And what I'll tell clients is there is black swans out there. It's real. You saw it with COVID. I mean, as an example, we saw it in 2001 with the tech bubble. I mean, we saw it in 87 when the market went down 25% in one day. So there are these, and I mean, you can just go on and on with these, what I would call black swans. But there's also this realization that you kind of got to live in today's world, right? And I saw family fortunes go up in smoke in the 90s. So a lot of you remember the Y2K, the end of the world was coming, get your money out of the market, get it into gold. In fact, people were giving up their US citizenships and moving to some of the islands, etc. So there's like this balance, and you really hit on it, which what is my answer is I'm saying you got to kind of be careful you don't go too far down this path, because if something does happen, more than likely the person who didn't prepare for it and the person who did prepare for it, there's probably not much difference in their lives. I mean, I know that some of them will say there's a massive difference, but in reality, that's probably not true. There's probably some people that have like bunkers and, all that stuff, but most of them are kind of what I would call dabbling in preparing. Right. So yeah, they may have some food and may have a little bit of gold and et cetera. But so help me explain what I just said. You kind of get what I was kind of getting
I,
to.
I fully get, and both of us are planners. I used to teach, I taught for 12 years, financial planning.
Right.
And you're really planning for three scenarios: worst case, status quo, best case. And you really can't live your life unless you dealt with the worst case. So because that hangs over you. I haven't done my wills, I haven't done this. Like it's sort of, like you haven't done something, it hangs over you. And in planning, we deal with that. Now, I shared with you a little earlier that we put together a process that we talk about in the book. We started asking the question because really a question is infinitely more important than the answer because it narrows your focus.
Right.
And as I shared, the more your focus is narrow, the more expansive your opportunities are. And what we came up with is a process that we call owning assets in order of asset security or confiscation. So basically, what's going to go first? Well, if you're going to have an investment portfolio, you want to make sure at least it's custodial. And what I mean by that, many people go for convenience and they end up having the easy trades and everything. They don't own the assets. So if a bank goes bankrupt, you can be screwed. And everyone says there's the Federal Depository Insurance Corporation. It's supposedly like, I don't know how much the number is, but the number I saw 3 weeks ago when I wrote a paper on it is $17 trillion supposedly insured your bank accounts. However, guess how much money is actually in that fund?
2%.
Well, I don't know what $120 billion is, but
It's very
supposedly it
small.
insures 17 trillion. And with the banks start collapsing, the ownership, everything that's owned goes to the Bank of International Settlements. You don't own anything. And that's what I was talking about, beneficiary owner. As long as things are good, you can trade, make money, whatever. But people giving up for convenience, they've given up ownership. So we would look at okay, you've got to invest. You need access to money because all
You
these
have to
cryptos.
live.
You
Right.
have to, yeah, you have to live. So change your portfolio then instead of like having it at a large financial institution where they own it, you're working with private portfolio managers that have it custodial. So that means the ownership is more it's in your name. It's not in some institution. I'll give you an example. Back when Lehman's fell, there was the trustee was both JP Morgan were the trustee and they were the main debtors. And the bank basically gave everything to JP Morgan. We're talking everyone's accounts and everything. They were they were the first debtors to be taken care of. And people thought, well, this is my money. Now the federal government had enough money and borrowing to actually make it okay, but we all know that's $37 trillion. I don't even know what that number is, right? Like it's I don't even have a fathom. And unbacked derivatives, there's 4 to 6 trillion, quadrillion dollars. I don't even. It's like that's 1,000 trillion. It's like I can't even fathom that, right? I have no like I can't. I'm a human. I have a wet brain. So you look at that. Then you might look at buying real estate income, like things that are directly yours, and you actually structure in a way that you have income coming in. I love insurance, but a certain type of insurance company.
Before
Back
we
in
go
the
to the insurance, I
yeah,
want to hit on the real
yeah.
estate. I want to kind of do this for the audience too. What he's talking about is if you go to a bank, your money's actually pooled. People don't realize it. I'm just re-saying what you're saying. People don't realize that your money is actually pooled. It's not individual. Yeah, you have an account with your name on it, but the money is part of this bigger pool that the bank is managing. In the brokerage world, it's actually custodian. If you look at a money market prospectus, it'll say like, I'm just going to use Schwab because I'm aware of Schwab, but they're all similar. It'll say your money, you put the money in this money market, it's custodianed at XYZ place with their name on it. So if Schwab goes out of business, that money's still your money. It's clearly your money because it's a second, third party. Schwab can't just say, hey, sorry, we spent all the money. Schwab Bank can, right? Because it's pooled money in a banking setting, but in a custodian. And then the third, and then that's right, right? You're saying what I'm saying. We're on the same
I'm
page.
saying it, but a lot like it's a fine print. It's
Yeah,
like reading the
exactly.
fine print and what's occurred. Because I will agree with you, but you have to really read the contracts because a
Correct.
lot of these large institutions like Schwab and mutual funds and whatever, you are not the owner, you are the beneficiary owner. And this is what's happened. And the argument was back in the early 70s, it took too long to trade. It was all paper. So William Casey was the head of the Securities Exchange Commission, who people might know his name now. Iran Contra. He was the one who was the head of the CIA. He happened to be dying. He appointed another person who worked for the CIA to create the Depository Trust Corporation. And everyone knows about Greenspan, but this guy, William Denzer, was more powerful, but he was in the background. And he made it so that ownership switched over to other institutions. And the argument was, you'll give ownership to them so they can actually administer trades faster and you'll be the beneficiary owner. And they did that and they moved off the paper base. So to read the fine print is so important. And I'm guilty because I was a stockbroker for the first 10 years of my career and I never read this stuff. So it's really important to understand that how the ownership is. Now, if everything goes to shit, it doesn't matter what the contract says. Like, I'm 6'2" and I walk into the worst part of town. Well, a gun doesn't care how big I am, right? It doesn't care. And that's the same thing. If things are really bad, it doesn't really matter what you've done. But to just be aware because you need to have managed account. And then, well, I talked about looking at other income streams as well, alternative investments, let's say buying real estate that's earning income and has a good cap and things like that, like things that are diversified. As I shared with you, and again, this is just my perspective. Different people are going to have different perspectives, and
Right.
that's important. I'm into de-risking and rematerializing. The people that I'm dealing with, they made their money, and now their focus isn't on so much on making more, it's keeping it and not outliving their money.
Which I agree with. And again, we're just having a conversation. So
Yeah.
that's really that's the goal of this podcast, actually. But one of the things that people have to be careful about when you talk about de-risking is you can over de-risk, right?
Oh,
Because you,
I'm not talking about cash. When I say de-risking, I'm saying having a level of discernment and putting another filter on
and
your
that's kind of my point is like there's this, all of a sudden you can't function in a society where you're building everything for worst case scenario necessarily. You want to be aware of worst case scenario and you want to have some understanding of it, especially like when you're doing individual investments. That's absolutely true. If you're doing a diversified investment, it becomes more awareness than it becomes, and then you kind of build that in. And then the other thing that you do is work is kind of best case, which is what most people make investments on, which is a total mistake. I'm 100. I really agree with you on that. But more than likely, it's that kind of more than likely outcome, right? I mean, it's this. It's you want to think about all three. Don't and don't invest or live your life based on all three necessarily, but you need to be aware of them.
to be aware. And I fully agree with you. Like I'm actually, I went through several when I shared with you the research because COVID happened. It was very disruptive in my life and my practice.
Right?
And I went through, we all know the matrix and they say like red pill, blue pill, right? There's really four pills that you have to that you go through. One
Right?
is like the blue pill where you're completely oblivious. And those are not the people who are seeking you out, Tim. They're coming to
Exactly.
you.
We don't talk to them.
They're like,
They
if you
don't
keep
want to
on doing
talk to us. They're back to that one
right.
to seven.
And it's like they have to agree with your worldview too. But if you keep on doing what you've always done, you'll always get what you've always got. And that's like a saying that we say in the business or people say in the business. And then there's a moment. And that's usually a lot of people who are mature or whatever. I remember I had a client once, her sister was not prepared for her dying. And it was a disaster. And it was like my best day selling insurance. She ended up buying like 5 million life. She bought disability, critical illness, long-term care. We're talking, I made like this is back in my 20s when I was in the business. I made $100,000 commission because there was a disruption in her life and she knew that this was going to happen to her and she was a responsible one, but this is not something that she had really thought about because when you're young, you don't think that you're going to die. You just don't. So there's a red pill moment. And what I hear from you is you don't want to live in the black pill moment where you say the world is crap. It doesn't matter what I do. And at that people become nihilistic, they don't do anything, they're lethargic. But if you work through that, you get in the white pill. And the white pill is saying, okay, the world is not so great. How am I going to enjoy and live my best life? and to go and look at the worst case status quo and go outside and take a walk. Spend time with the people you care about, and be aware of those things and just be aware and make the best life for yourself. And I think that's exactly what I'm hearing from you is we need to live. You can't live with fear. We
Yeah, no,
felt
that's
that
right.
during
That's
COVID,
exactly right. You can't live with this like end of world's coming because
right?
then you just kind of step out of society. And I want you to finish your thought, but I want to hit on one more thing. So to let you
Yeah.
finish your thought, but I have seen more fortunes go up in smoke over my 30-year period on real estate more than any. That is the number one investment that I see fortunes go up in smoke over. And the reason is people don't calculate in carrying costs. They don't say worst case scenario. So it's not that, like, for instance, if I go buy a particular stock, pick it, doesn't matter, buy IBM. If IBM goes down, the carrying cost on IBM is nothing, right? I mean, it's minimal. I mean, if it's in my IRA, if my IRA has a $50 a year fee on it, that's it, right? Where where if I have that same amount of money in a piece of real estate, IBM will someday come back more than likely if it's a functioning company. And we don't go into end of the world stuff. I'm just saying, we're
Yeah.
not. I'm just picking kind of time frame.
Yeah.
If you buy real estate and you don't understand carrying costs and you get it too leveraged, that is where people will all of a sudden get into that situation where they can't pay the carrying costs. So they have to sell that real estate, even though had they been able to hold on to it, it came back. I mean, they would have been fine had they been able to hold on to it. So,
Yeah.
so, so the real estate piece does need to be really thought through as an
Yes.
investor with people like us and talk about best case, worst case. But that worst case isn't I'm buying this piece of real estate for $500,000. Worst case, it goes to 100,000. That is what people think is worst case in that real estate. That's actually not it. The
Oh,
worst
I
case
agree.
is that it goes from 500 to 200, but it costs me $3,000 a month to maintain. And if worst case happens, I can't maintain that 3,000. I lose the real estate, and all of a sudden, 5 years from now, it's back to five or six or 700,000.
I fully agree because what I agree with you is people will not leverage for stocks and things like that, but the biggest leverage that most people have is for their home.
And they don't even think about it. In fact, a statistic on the home, I was doing an article 3 weeks ago on this, so this is relatively new. 18% of American households have a net worth of $1 million, which I was like shocked. I was like, wow, I didn't realize it was that big a number. But then if you dig into the numbers and subtract their home, the home they live in, it's 3%. I mean,
Yeah.
so to your point, people will really leverage real estate to where and not really understand the risk.
And that's the key. A lot of people buy homes and they should look at, let's say, the last 30-year mean, like how much income, to the value of a house, like how many years you'd have to work to have that. And let's say I live in San Diego, it's 15 times earnings, and it's one of the most, there's $100,000, like it's one of the wealthiest cities in America. But it'd be the average house now is like $1.5 million. Well, the overall average over the last 30 years was 7.5 times. So it's overvalued. It should be $750,000, like
Right.
half. And this is exactly what you're looking that you mentioned. If like I had to rent a place, if I could I rent the place? If I rented it, will my costs be covered? Because there's huge leverage. But that being said, that's why you hire people like you and I, or let's say someone who's an expert in real estate. They're not like talking about, going to the spot or whatever. They actually see this stuff. They actually touch it because people, unfortunately, they go and see a ticker sign on the exchange and they don't connect it. Well, it's a real company with real, doing real things and losing and making money. Like they don't make that connection. They think, well, yeah, it's a company, but this is separate, like me buying a Powerball. Like it's really like the disconnect is there. And
Totally.
and what I think is important is the value of an advisor. I shared with you earlier that what I found really interesting is most people seek out advisors because they're looking to share the risk. And it's not about having the greatest ideas, it's actually having the greatest questioning. Basically, I've seen this before. I had an experience. They have that saying that says a picture's worth 1,000 words. And I would add that an experience is worth 1 trillion of those. So when you share with me that you've been in the business over 30 years, I start, and the financial, I said, well, he's still here. So what has Tim experienced? And he's still here, right? He's still standing, right? Like, okay, so if he got involved in the 90s, he saw the tech boom, where like all you needed was a napkin and you got, several $billion, right? You got that, and you're seeing that with AI right now,
Yeah,
right?
exactly.
And then you lived through 2001, right? When you first had NASDAQ crash to like 80% and you had the Dow Jones and the New York Stock Exchange just like crevice, right? You saw that. Then you saw the rise in the real estate, right? You saw, all these things. You had experience and you've been in the trenches. And instead of finding something else like working at Burger King, you're stubborn like me. You stayed in the industry, right?
I tell my friends, some of my counterparts, they're like, why don't you go do something else? I said, what are you going to do? You've spent your whole,
I can't do anything. I'm not hireable. Like honestly, if you read my writing, like if you again, I'm going to push my QR. You'll be able to
yeah,
see my
do.
writing. No large firm is ever going to hire me because my brand, I guess if I have a brand, is I'm the little boy who's saying the king has no clothes. However, my partner is more measured than I. We need, now that we pointed out he has no clothes, okay, can we find a dress shop? Like at least it's something to clothe the
What do
king,
we
right?
do with that? Right. I mean, that's
Yeah,
kind
like
of
what do
the,
we do? Let's work this out. Okay, now I identified a problem. Okay, what can I do to mitigate it? And I always tell my clients, it might not be the perfect solution. You might not think it's the best solution, but it's the only workable one that's available. And if another one that comes available, because I'm human, I'm going to share it with you because we're all human. Like if I could tell the future, if you could tell the future, we wouldn't be here right now. We'd be sharing that ticket that someone won in Texas that sold for $2 billion. However, the only things not known that I understand is the history not studied. There was a movie that sticks in my mind. It was called 50 Dates. It was with Adam Sandler and Drew Barrymore. Do you remember that
oh
movie?
yeah, I saw it. I know exactly what you're
And
talking about.
but what was I always look at things and I do conjectures and I use it as a metaphor. I think that's humanity. Like Drew Barrymore woke up every day and she didn't know.
Hmm.
And she fell in love with him again in like 50 dates that occurred. Well, what I look at is that's every generation. There's nothing that has happened and happening that hasn't happened before. So it's a history not studied. And our job is to have experience and also to do that study because people have to find people they trust. They have to delegate, not abdicate, delegate to people like us. And the biggest thing that you and I are trained as is questioners to ask questions. What
That's right.
happens if this happens? What happens if that? And in essence, we're not invested. They say, do not defend yourself if you're a lawyer. Hire someone else. If you're a dentist, you can't fix your own teeth because you really can't see what's happening in the mouth because it's your mouth. You need a level of distance. And you have to find someone, like it's almost like a romantic relationship. You got to find someone who's going to be comfortable, that you feel comfortable enough to undress and show your blemishes. And you and I aren't so young anymore, right, Tim? Like, I don't know about you, but it doesn't matter
Yeah.
how much I work out, my tummy just doesn't want to leave me. And I'm going to, you know what I mean? Like,
Right.
and I have hair growing in places I don't want it to grow, and I don't have hair in the places I would love it to grow. And that's where everybody needs to find people who they're comfortable with.
Right. And to kind of get to the end, we're coming up on the closeout, but to finish this up, I want to kind of summarize something about advice. So what we're hearing, and just to summarize to some degree, is people want to understand your risks. So when it comes to an individual investment or all your investments combined, it's important that you understand best case, worst case, and likely case, and then live your life accordingly, aware of those things, and then making adjustments for those things to occur that you're not completely caught behind and surprised by. But when you're asking for advice, see, I get lots of feedback on you shouldn't use seek counsel. I don't care what words you use. Use advice, seek counsel, get input, be curious, whatever words you want to use for that seek counsel that I'm talking about. Think of it as getting input, but there's two distinct kinds of inputs that's super important to understand because they're both valuable, but you have to discern them differently. And one is what I would call formal counsel, and the second is informal counsel. So formal counsel is advice that you're paying for. There's consequences to that person giving you advice. If you hire me and I give you advice and that's bad advice, I have a consequence and a responsibility and accountability to you. That's paid for formal advice. Informal advice is stuff you don't pay for. That's this podcast, actually. We're just giving you input, suggestions. You're not paying for it. Okay. So if you go do whatever you're doing, that's up to you. You're making those decisions. That doesn't mean the advice is bad or the input is bad. It just means you need to discern it differently. And in fact, you need both. You need formal and informal advice when you're making big financial decisions and big financial movements. But over time, all the people that I interview that are successful and people that I've worked with that have lots of money, that is that nuance. And it's almost more art than science where they are so good at discerning the combination of those three. And then if you ask them, buy this investment, whatever that investment is, it's so fascinating to me because I'll say, well, who gave you that advice? They cannot almost ever tell you who gave you that advice. And it's not that they don't want to give you the advice. It's not that they don't want to give that person credit that gave the advice. It's truly they don't know because they talked to so many different people when they made that decision that they ended up taking some variation of two, three, four people, right? So it wasn't, I read Starts with Gold. And then I talked to Tim, who has said, you need to be a little more measured in the approach. And then they talked to someone else who says, just go and buy tech stocks, right? But then you end up doing something in the middle or some combination of all the advice. That's what I'm talking about when I say seek counsel, seek advice. It's educate yourself so that you understand and are comfortable with best case, worst case, and likely case scenario. Does that make sense to you, or did you like?
No, well, I said no, but I mean yes, it makes perfect sense to me. I we started off the program, and we're going to loop
Wrap.
around because
Yeah,
it actually speaks to me with what we were talking about is the question that once I figure out what I want to achieve in my
that's right.
life, then I'm able to ask a simple question. Does this move me closer? Does this move me further? And I knew a gentleman, and he's no longer here, but he built a beautiful real estate portfolio worth close to $3 billion. Now he built strip malls in small little towns, and he would get the large chains like to go and locate there because they wanted to deal with one person. And he shared with me that he knew what he was good at. He could build a strip mall with a supermarket with a drugstore, like something and bring other things together. And he said he knew people who made money by buying bank stock. He knew people who made money by building homes. He knew people who made money by building a factory that sold widgets. And he knew how he made his money. So when people would knock on his door and say, "Hey, Ron, here's a great opportunity to go into." Well, he knew
That's a,
himself. And he was able to say, you can make money that way. That's just not the way I make money. And I, and that's the purpose of a planner. I've really thought about the certified financial planning designation and really what it is. The value of it is yes, these people are skilled in investment stocks, mutual funds, life insurance, and all that stuff. But the real power happens to be the financial planning process, where they actually say that number 6 on the planning process is going back because it's like flying a plane to Los Angeles. If I'm starting from Tampa, I will be off course. I have to be able to sit down and take stock and take in other things that have actually entered our lives because things change. And that being said,
that's a
I
great
think
point.
that's the most important question.
Yep.
To sit down with a planner like you, Tim, to go and ask them what they want to achieve. And then when they come with a crazy idea that they talk to their dentist and then they're saying, I want you to buy a penny stock, you say, how does that move you closer to what you said is important? And at that point, it's like taking someone off the edge. They make the decision, but in essence, they got to know in greater context of how that fits into their lives. And the value of someone like you and I is I'm not invested so much in your life. I am. I care. I don't want you to die. I want you the best life. We're tied in. The more successful they are, the more successful we are. However, we're not like so invested. It's not like sometimes I've dealt with like lots of money, and we're talking like, I've dealt with the portfolios of $100 million or more, or businesses are worth like a half a billion. And the thing is, I've learned that that's not my money. That's someone else's money. Like I'm not going to attack. I'm not a. I was when I was younger a sycophant. Like people who don't know that word, it's a great word. A sycophant is someone who basically values themselves by the people they know. It's not mine. That's their journey. And I got to tell you, the guy who taught me the lesson, who really drilled it into me about that's not my business. This is what I do. He died with $3 billion in his real estate portfolio, but right now he sits next to his wife in a cemetery with maybe about 5, 6 feet wide by 8.5. And the end deal is we can do all the planning in the world. How did you live your life? And were you working with people like him that you like? And if you like him, you're more likely to take his good advice than if you don't like him, you say, I don't want to deal with him. And that's the key. And I think you're doing a great job. And I can feel it with you, Tim. I would want to deal with you, but I'm not in Florida. I live in Calmy,
No.
California.
So to finish it up, I'm going to comment on the CFP. The one thing that I was shocked by when I did my CFP, because, and I think this comes with age, so I don't think it's just the CFP. It just is that event that forces it. Is I started my career out on the floor of the commodity exchanges. Okay. So when I was younger, I had a really strong opinion about what I thought, and I was very confident I was right. I mean, so if you had a conversation with me, it was almost sickening when I look back over my career, how confident I was about being right. And then as I got into middle age, I got to where I was like, well, maybe I'm right, maybe I'm wrong. And then when I took the CFP, I was absolutely humbled by the fact that I really don't know anything. Okay. And the goal isn't to play the role of telling people the answer. The goal is to make sure that I'm connecting all the professions that they need, right? So if there's a banker, a mortgage person, an insurance person, I don't do those things. I go get those people and help people do them with experts like yourself that does wealth transfer or moving money from Canada to the States. I don't try to be the expert. I try to connect my clients with the experts. And I think that's really the biggest takeaway from today's call. So I can't tell you how much I appreciate you spending an hour plus. So I know we're getting long. Is the goal is not necessarily to go into something, whether it's let's de-risk ourselves, but understand kind of where you're personally at and then de-risk yourself according to your personal place in your career, in your life, in your finances, in your beliefs, etc. And I think when you go at it like that, if you go read like Starts with Gold, it's a fantastic piece of information that help us all become more knowledgeable about history. And then we will take that information and make decisions based on what makes the most sense for us individually. Is that a good way to kind
I
of finish it up?
I fully agree with you. Like in essence, knowledge is great, but the application of knowledge is worthless.
Exactly. That
And that's in essence where when someone reaches out to you, I'll just leave you with this. I thought about when I started reading lots of psychology and everything, I had applied to a PhD program in psychology and something dawned on me. And I had my CFP. I said, you and I work with the most functional of the dysfunctionals. And what I mean by that, in a loving way, is every human being is dysfunctional. But the people we deal with have self selected themselves that say, I want there to be a better future. I want to make sure my kids are taken care of. So they're not heathenists living in the moment. They are living in the moment, but they're also planning for a future, not just their future, but for their community, for their family, for their grandkids. And that's what I mean by we all are dysfunctional, but those who seek out planners are the healthiest of the dysfunctionals because they are invested not just in the present, in the future. They're looking at making their lives better, not talking about things that didn't work for them. They learn from it, but they don't get stuck in it because when people go to a therapist, all they do is talk about how shitty their lives are. When they go to you, yes, they'll tell you, I'm not in a good place right now, but they're planning to a better day.
yeah, no, that's a perfect
And
way of
that is,
finishing.
and that's really what people goes back to sharing the risk, going to someone you trust enough to share things personal. And I shared with you, I sell insurance. Well, I get disclosures not only what the doctor gets because of the underwriting, I get what the accountant gets. I'm being entrusted with the most like intimate things on a person, right? Their biology and their finances.
Right.
You're a psychologist, and you seem to be a very good one because
So
I don't want to stop talking. I
great.
mean,
That's an awesome way to finish. So for everyone, and we appreciate it. Go download his book, buy it on Amazon. Starts with gold. I think you're going to see some other his other books coming out. What's the crypto? It's
I
stopping crypto, killing
killing
crypto.
crypto.
That's going to be an interesting. I'm definitely going to download that one. And but to finish this, I just want to reiterate the three principles PlanAssist has is have a plan, be diversified, and seek counsel, and do it with people that you love. So with that, thank you so much, and we appreciate it. Peter, thanks for joining me today. This has been a really fun conversation. I expected it to be, but it really was.
Well, thank you, Tim. Thank you for inviting me, and thank you for letting me share some of my disasters and learning
It was
with your
awesome.
audience.
No, you were fantastic. Thank you so much.